Okay, yes for Australian resident, no for any attachments. Title, Mr. Surname, Carpenter. First name, Andrew. There is no middle name. No, his name has not changed in this last financial year. His postal address is the same as his residential. So number 17, Dobra Avenue, Roma, Queensland, 4455. And no, his postal address hasn't changed. So where you have home address should be as above. And we're going to jump straight down to the contact details. So mobile number 0441 658 332. There is no home phone number. And the email address is andrew.carpenter@aapt.com.au. Jump straight down to date of birth. So our client's date of birth is the 26th of the 12th, 1976. His BSB is 083832 and the account number 855 498 663 and the account name is Andrew Carpenter. Okay, we're going to jump straight into income. So he's only got his payment summary, client's job description is a welder. So our client is a welder. His business ABN is 24 236 406. His tax withheld, $19,014. And his gross income, $80,299. So that all goes in item 1. Now item 2, allowances, earnings, tips and directors fees at label K. We have an amount of $650. Excellent. So we're now going to jump down to the end of the page. There is no more income. And we're going to fill out our total tax withheld of $19,014. And then jump straight to the next page because we have no more income. So our total income or loss, label C plus label K. And your formula is going to be $80,299 plus $650 equals $80,949. And this is our total income or loss figure. Perfect. Now just get you to scroll down to D9 before we go any further. On our client's payment summary, he actually has workplace giving for $120. So this goes at D9, label J, of $120. Perfect. Now I'd like you all to get your depreciation worksheet up on the screen for me, please. So student name should be the first thing you fill out, then click on tab, and it'll take you through the motions. So your client name is going to be Andrew Carpenter, sorry. So client name, Andrew Carpenter. Tab across. 4. Now this is for your work-related expenses. So we'll touch more on the other options there a little bit later on in the modules. So work-related expenses, then tab across, and your lesson number is 4.1. Okay, now if you have a look at your practice example question, we have 2 assets that have been purchased brand new this financial year for our particular client. So we're going to start with the plant welder. So under where it says description of asset on your depreciation worksheet, this is where you're going to put that asset's description. So 350A MIG, so 350A MIG plant welder. and then tab. So because it is a brand new asset, we need to put in the date that it was acquired, the date we purchased that particular welder. So the example says that that was on the 1st of July. So your date of acquisition, your cost was $2,000. So cost $2,000. Now we want to go straight over to your decline in value column where it says effective life. So decline in value, effective life. So this is the effective life of the asset. So it already tells you in the question that the effective life of the MIG welder is 15 years. So I'd like you all just to type in 15 and then hit tab once. We now need to work out what the percentage rate is going to be for this particular welder. So we're using the diminishing value method for all of these practice examples. Okay, so we now need to work out what the effective life percentage rate equates to. So diminishing value method is the course that we're going to be doing. So your formula for that is going to be 200 divided by the effective life of the asset, which is 15 in this case. So 200 divided by 15 gives you 13.3333%. So I'd like you to round that to 2 decimal places, which gives you 13.33%. Excellent. So now we need to work out what the value is going to be. Now this is very important. We need you to show all of your calculations for these particular percentages, for these particular formulas. So down the bottom of the screen, as you can see, where we've got calculations, I'd like you to put in welder, and we're now going to put in what our formula is. So our formula is going to start with our cost of $2,000, and we're going to times it by our percentage rate of 13.33%. Now, because we purchased the asset on the very 1st of July, we're claiming for a full financial year, so we don't need to apportion it for this example. So I'd like you all to work out what your solution would be. So 2,000 times 13.33% gives you $266.60. So $266.60 is what you will put in under the decline in value column, diminishing value. So that's where you're going to put your dollar value in. Excellent. Now in this particular example, there is no private use percentage, so there's no private use amount. So we want to jump straight across to the column that says deduction for decline in value, diminishing value, because that's the method that we're using. Now we don't need to apportion that $266, so our deduction is going to be $266.60. If we had any private use, we would have to subtract it and put only the business portion in this column. Excellent. Now finally, we need to show what our closing written down value is going to be for this financial year. And whatever that closing is, will be converted to next year's opening written down value. So to work out what our closing written down value is, we need to subtract our cost price of $2,000 from our decline in value, diminishing value of $266.60. Very, very important that you always use the figures in these two columns, okay? If you have an opening balance from this, if this was an opening balance and it wasn't a brand new asset, then we would go by the opening written down value minus this diminishing value, declining value method. Very, very important. So our closing value is going to be $2,000 minus $266.60, which gives you a closing written down value of $1,733. Now for closing, we are going to round. So $1,733, and we drop the 40 cents. Fantastic. Now we purchased another asset during this financial year, which was a Viking black welding helmet. So we're going to put that in as our description of brand new asset. So Viking black welding helmet. And our date of acquisition, so the date we purchased this particular asset, was the 20th of October 2016. And it cost us $399. Excellent. So we're now going to jump over to our effective life, which for this particular asset is 3 years. And we now need to work out our percentage rate. So again, we are using the diminishing value method. So your calculation is going to be 200 divided by 3, which gives you 66.66666%. So we're going to round it up 2 decimal places, which gives you 66.67%. Fantastic. So we now need to work out our deduction, we now need to work out what our declining value is going to be. So our formula will be our cost price of $399 times, now we purchased the asset on the 20th of October, so we can only claim a deduction from the 20th of October. So we need to work out how many days there are from the 20th of October to the 30th of June. Now, for those of you doing this at home, if you have a look through the website for the tax training course in your student home content and scroll right down to where it has your student worksheets, the very first two there are your 365-day and 366-day calendar. So if you could all open up your 365-day calendar for me, please. This actually shows you a whole list of how many days between the dates, going both from the 1st of July to say the 10th of October and from the 10th of October to the 30th of June. So for this example, we want to find the 20th of October. Do you want to circle it? So this example, find the 20th of October, which you can see circled on the screen here, and we are going from the 20th of October, okay? It's not to, it's the from column. So as you can see, from is 254 days, and that's how long we have owned this asset for in this financial year. You can all go back to your depreciation worksheet for me now. Our formula will now be 254 divided by 365 times 66.67%. Excellent. So if you get your calculators out, and very, very important with these particular formulas, please don't use your mobile phones. Make sure you have a proper calculator that you are using. So your formula, 399 times 254 divided by 365 times 66.67%. This should give you an answer of $185, and we're going to round it up to 2 decimal places and 12 cents. So $185.12. So that is what our decline in value amount is, and that goes in the diminishing column. Perfect. So again, we have no private use. So our deduction for decline in value is going to be the exact same amount, $185.12. And we now need to work out what our closing written down value is going to be for next financial year. So you're going to use the cost price of $399 minus your decline in value of $185.12. So this should give you a total of $213.88. Now we're going to round it up because it is over 50 cents. So your closing written down value is going to be $214. Perfect. Now we need to total our deduction for declining value column. So you're going to add your $266.60 plus your $185.12. And these two figures, or whatever your total is for these two figures, is going to go at label B, which you can see circled on your screens now. So 266.60 plus 185.12 gives you $451.72. Then you want to total your A plus B. So your A doesn't apply in this situation because we've got nothing in there, and your B is going to be $451.72. So your total A plus B figure is $451.72. Now this is your depreciation claim for this financial year. Now we need to transfer this amount to our work-related deductions worksheet at D5. So if you can all open up your work-related deductions worksheet, please. And again, first thing you should be doing is filling up the very top, student name, lesson number, and client name. So we're going to go down to D5, our other work-related expenses, and you're going to see there depreciation transferred. So whenever you have depreciation for work-related expenses, you're going to move it from that worksheet into D5 transfer. Okay, so our amount going in here is $451.72. Now we have no other expenses in this particular question, so you're going to total your D5, which will be $451.72. And we're now going to transfer that figure there for total of D5 to our main tax return. So if you can all bring up your main tax return for me, please. So you're going to bring up your worksheet. Perfect. So at D5, label E, you're going to put in $452 because remember we cannot have decimal places here, and it's $451.72, so we're going to round it up. Perfect. Now we've got no other expenses, so we're going to total of our deductions column, okay, which is going to be 452 at label E plus 120 at label J. So this should give you a total of $572. Fantastic. So we now need to work out our subtotal and what our taxable income or loss figure is going to be. So we're going to subtract our total income or loss of $80,949 from our $572, which is our total deductions, which gives us a figure of $80,377. Our subtotal is going to be $80,377, and our taxable income or loss is also $80,377. Fantastic. So that's everything for this particular tutorial. Please make sure that you save and submit all of your worksheets and your tax return. We will now be going through this same example on our Handy Tax software.